Okay, good evening, everyone. Again, welcome to our weekly commercial lending training. So you bring your eyes, 2022, it's almost gone. A few more days, it's going to be behind us. So this year, definitely there's a lot of change in commercial and in lending in particular. So if I still remember at the beginning of this year, January, February, March, somewhere around there, the interest rate was still historically low. If you're talking about a 1 to 4 unit residential property, at that time we can get interest rates somewhere around 3.5%, and people still think 3.5% was expensive. But again, today, where are we? With the same exact property, the interest rate is somewhere around 7. I don't even think that we can get 7.5, 7.25, somewhere around there. So it's a dramatic change in terms of lending in this year. So not just commercial lending, but the traditional lending world is definitely got a huge impact for it. We see dramatically change in the real estate industry, mortgage industry, insurance industry. I still remember at the beginning of the year when people were purchasing properties, they bid on it. They raised the price, raised the offer price, 10,000, 20,000. I mean, in some extreme cases that I heard in the Bay Area, $1 million property, they raise up to 1.1 million, 1.2 millions to get the property. But today is totally different. It's in a short 12 months, the entire economy, it changed 180 degrees. So now also, I'm sure that a lot of big organizations are laying off people, including Facebooks, Amazons, high-tech companies, so on and so forth. So it will be a very interesting to see what will happen for the next year, 2023. So what about us in commercial lending? What are we going to do? For the longest time, I keep telling people that commercial lending is one of the industry that is so-called bulletproof or recession-proof. Why is it? For the longest time, when I tell people just don't care because the economy was good, everybody was making money. Everybody thinks that, hey, whatever I'm in, it's a bulletproof industry. Nobody's going to touch me. But again, today's is different world. So as many of those industries are turning around, what would happen to commercial lending? Now, I'm not saying that there's no effect whatsoever on commercial lending. Definitely, commercial lending will get affected as well. But personally, I believe commercial lending is not going to be affected that much compared to other industries. So today, I'm going to share with you my experience. Now, many of you already know we have been in business since 2008. We saw a lot of ups and downs in the industry. So whatever I show you, it's the characteristic of commercial lending. It's not my opinion. It's not my thought. That is just the characteristic of what commercial lending is. So I'm just going to share with you facts so you make the determination what's going to happen next year. What should your focus be in next year, and why? At the end of the presentation, hopefully you understand why we call 2023 the disruption of commercial lending industry. Okay, so let's dive into it. So the first thing that I'm going to talk about is from the angle of 1 to 4 unit investment property. And as I mentioned, 1 to 4 unit. For the longest time, for the last 5, 6, 7 years, 1 to 4 unit was one of the hottest real estate investment strategy for a lot of investors. Everywhere, the market is doing good, especially during COVID. The real estate market was so white hot. We didn't expect that. Now, after talking to so many people, and a lot of people just saying that it doesn't make sense. I mean, COVID, a lot of people lose their job, a lot of people not making money. But how come the real estate market just goes so crazy? So one of the reasons that we figured out is that, hey, a regular family, four-person living in a townhouse, in the normal days, it was, there was no problem. Husband and wife go to work in the morning, 2 kids go to school. Pretty much during the daytime, the property is empty. And now when they come back home, it's after work. They come back home, they do whatever they need to do. And, everybody live a peaceful life. But during COVID, it's totally different. Now, all of a sudden, everybody got locked into the house. And now we used to go to work, go to the office to work. And no, we're not going to the office anymore. We have to work at home, right? How many of us are working at home, right? Work at home before, during COVID. Now, what happened to the kids? Now the kids need to go to online school. So all of a sudden, you found 4 people in the house 24/7, and everybody need to have their own space. Everybody need to get onto a computer. Everybody need to go onto Zoom, and everybody's talking on their own. And now all of a sudden, a lot of the family realize that, wow, the space that I'm living in is not enough anymore. We see a lot of people from New York, living in those expensive condos. It used to be fine, but now they cannot deal with that anymore. So they have to look for properties. And that is what we are seeing across the country. People out there buying properties, builders keep building, even though the cost of building is going up, but it's still, people are still buying it and buying it and buying it. And I think that is just one of the reasons. Okay. Now I think the second reason, I'm not sure is it true or not, but that's what I, see. A lot of people actually getting a lot of checks from the government. And also because, COVID got locked down, they have nowhere to spend their money. Again, they have a lot of savings, and people start going out there to purchasing real estates. That could be another reason, right? So regardless what it is, the real estate was very, very hot for the last 5 years, 7 years, whatever that might be. But then, of course, this year, things changed. Now the market started to change. Interest rate has gone up so much already. The prime rate, ladies and gentlemen, do you know what the prime rate is? The prime rate is at 7% right now. 7%. Okay, I think they're going to raise the prime rate one more time. I was hearing the news yesterday. They're saying that, hey, by the end of the year, before the year end, they're going to raise another, half point, something like this. So again, the interest rates just keep going, and God knows what the interest rate will be next year. But today is definitely a totally different world. Now, surely, because of the interest rate change, a lot of the first-time home buyer got scared. They start to hold back. But the good thing is that a lot of the investors now finally coming out to cherry pick the property. So during the the hot days, you cannot find a property. Okay, once the property go on the market, you're within a few days you have 10, 20, 30 contracts. It's just nuts. But today, what happened? When a property go onto market, probably the property need to be sitting on market for a week, 2 weeks, 3 weeks, and now there's a lot more property than before, and the investors now coming out to buy it instead of the first-time home buyer. So that's what happened in commercial lending. Commercial lending, who are we dealing with? We don't deal with first-time home buyers. We do not deal with primary residential properties. We deal with investment properties. All these investors, I would say most of them, should have an experienced investors, meaning that, hey, they're not willing to buy anything high. Okay, so when there's a lot of inventory on the market, what happened? Now they have the negotiation power. Before it was the seller's market. Today is what? Today is definitely the buyer's market. And when the buyer's market happens, what will happen? What's going to happen? They will negotiate. They will negotiate a purchase price. Okay, so this is what we are seeing today. Okay, so let me give you a comparison between 6 months ago and today. 6 months ago, let's say you listed the property for $450,000. Very easily, you bid up the price. You put in 10, 20, 30, 40, $50,000 on top of what the listing price is. And that is what the final purchase price is. Okay. Now, at that time, I'm talking about investment property. And again, I'm not talking about FHA loan, VA loan, none of those things. So most minimum, you need to put down what, 20%. So if that interest rate, let's say be fair, 5%, around 5% at the time. So if you do the calculation, you are talking about a monthly payment of approximately $2,147. Okay, so that is 6 months ago. And today, exact same property, you listed for $450,000. Now, are there anyone else who still purchase it at the market price today? Not even talking about adding more, big up the price. It's not happening anymore. So what we're seeing across the country is that a lot of people negotiate their price. Give you a perfect example. Personally, I have a house on the market. If a fix and flip, we finished up everything, we put it on the market for $470,000 for 3 weeks. And now finally we got a contract. You know what the contract is? $435,000. Okay, $435,000. That is true. I can show you the contract if you want to see. $435,000. But hey, we dropped $30,000, $35,000. It's okay because we are fix and flippers. We still make money. But that is what happened in the market right now. So the pricing definitely dropped. Now, if you're an investor, you still put down 20%. Now the interest rate is what, 7.5%, let's say in this time. Okay, so now what is the final monthly payment? You look at this, not that much difference, $2,377. You are talking about $100 difference, right? So even though the market interest rate has gone up, yes, a lot of the first-time home buyer, they might not qualify, but the investors are what? The investors, that means that they already have their primary residence. Perhaps they already have a few investment property out there somewhere around. They have the money to invest. A lot of the first-time home buyer, they cannot do it because what? They cannot come up with the down payment. Okay, they might not even qualify to get a bank loan. But come to commercial lending, it doesn't matter because we are dealing with investors. Regardless what the market is, investors are still out there purchasing properties. So what we are seeing today is that a lot of investors or buyers that they are used to be able to qualify loan from a traditional bank, they no longer qualify from the bank anymore. Why? The bank, as the market tighten up, as the interest rate go up, the bank is going to already tighten up their underwriting guideline. Used to be 720 credit score, they're okay, but now some bank raised up to 750, some bank raised up to 800. You see, so now it pushed away a lot of the investor, some of the buyer that's used to be able to get loan from the bank, and now they're not able to do that anymore. We see that a lot of those clients that come into go to a commercial lending to get their loans. And once you come into commercial lending, the good thing is that, hey, we do not look at your income. We do not look at your tax return. All we looked at is what? All we looked at is your DSCR, the property that you purchased. Does it make sense or not? Is this property, can rent it out? As long as this property can rent it out and you have 20-25% down, you will get a loan. And we do that all day long. So I see for the next year, I don't know about 2024, but at least for the next year, 2023, a lot of the people that purchasing 1 to 4 unit would be investors. And that is the best time to get into, it's a good time to get into the market. Why? Most investors, they do not purchase property when it's all-time high. When do they purchase property? When the property is going down. Because they have the experience, they're not afraid. They will go out there to do it. First-time home buyer, they're not like that. They're afraid. Every time when they look at something like this, they will get away. They will say, oh, let me wait a little bit. Let me wait a little bit. Let me wait until the market go back up, but then I buy. It doesn't make sense. So investor, remember, we are dealing with investors. Okay, so that is my 2 cents on investment property, 1 to 4 units. And I still have a pretty good feeling about this. And the even better is that because we are dealing with investors, we don't need to educate the buyers. Because a lot of the first-time home buyer, when they come to us, what happened? They ask you a lot of questions. You have to educate them. You have to show them what to do. But investors, they don't. They already know what's going on. They know that property is good. All you have to do is, Alan, just give me the money. Hey, I'm all fine with that. So a lot less hassle. That is my 2 cents on 1 to 4 unit investment properties. Now let's move on to the next topic. Multifamilies. Okay, multifamilies. Multifamily, this is definitely the trend of a lot of investors. Why? Because think about this. What would you rather do? Would you rather buy 4 single family home, or would you rather purchase 1 apartment that have 4 units? Which one you think will give you better return of investment? Absolutely multifamily, because of what the management cost is less, the maintenance is less. Again, it would just a lot less headache, and that is what happened to a lot of investors when they purchase after so many number of single family homes. Now they switch to investment multifamilies. But before I show you next, let me show you what is the market talking about investment multifamilies. Now, do you see my screen right here? What do you see? Do you see that the M report, rent growth expect to moderate further into 2023? You see that screen, right? The rent is not going to come down. The price of the property might come down. It is coming down, but the rent is not coming down. The rent is actually going up. You can do a search. You can do a Google search on rent forecast for 2023. You will see all across the board, all the experts are saying that the rent is going to go up. Let me show you another one. No huge drop off coming. Multifamily market expect to remain hot into 2023. Remain hot into 2023. What does it mean? Multifamily is still one of the best investment out there. Now, who can fund multifamily? What is multifamily? Multifamily is 5 unit and above. Now, if you go to a traditional mortgage loan officer, do you think that they can fund something like this? Absolutely not. They can fund 4 unit and below. I would say 95% of the mortgage loan officer out there have no idea how to do multifamilies. We can do it. And as a matter of fact, a lot of people are looking for multifamily right now. Let me give you another screen. Forecast, big drop in house sales. Big jump in multifamily starts. Again, you do your own research. I am just giving you the information that I search. It's not my opinion, again, right? It's not my statistics. But one thing that about me is that, hey, I need to know about my business. Where is commercial lending heading next year? I start to do all this kind of research. And I encourage you to do that also. A lot of people ask me, hey, Alan, how do I learn? The best place to learn is Google. Do a search, whatever topic that you want to find out, just do a Google search and you will find all the information that you need. So multifamily absolutely is still one of the best investment out there. And the banks love multifamilies. So now remember, for single family home, the prime rate is at what? Is 7%. Now, can you get 7%? Most likely not. You have to add the margin to it, right? So let's say a paper client come to us. I think the lowest rate that I can get this client is somewhere around 7.25% for a single family home investment. But what about investment? What about multifamily? Multifamily, the interest rate is still very low. It starts at 6%. And I say that one more time. Yes, for a stabilized property, multifamily still at 6%. Now, what happened to multifamily 6 months ago? The interest rate is somewhere around 5%, 4.5%, 5%. I would say on an average, it's about 5%. Okay. Today, what is it? About 6.5%. So you see, do we got impacted by the rate hike? Yes, absolutely. But is it as severe as the single family home? No, absolutely not. It's just a little bit. So to a lot of investors, it's okay. It doesn't really bother them that much. So multifamily is still a very hot asset. Everybody chase after. And so if somebody owns multifamily, that's what we see right here. See, for a single family home, most likely once you purchase the property, unless the interest rate goes down, you're not going to refinance. Am I correct saying that? You're not going to refinance. And there's no reason for you to refinance. A lot of people have no reasons to, even though you have a lot of equity in that single family home, most people would just sit on it. They're not going to do anything. They pay down a mortgage and they pay off the loan. And yes, now they're living in a property worth about $500,000, no mortgage. But imagine there's $500,000 in your house that you're not using. But to most people, there's no reason for them to use. But that is different in multifamily. Now, are there any 30-year fixed loan for multifamily? Yes. But what is the average term for multifamily? 5 years, 5 or 7 years. Why? Because honestly, nobody will keep a mortgage for 30 years. They might keep the property for 30 years. Does it make sense? But they might not keep the mortgage for 30 years. Why? Because there's so many reasons. Because let's say, hey, now they purchase a multifamily, or after so many years, now the property getting old. They need to upgrade the roof. They need to paint the entire building. They need to change the carpet. They need to upgrade the common area, the air conditioning units, so on and so forth. Now, where do they get the money from? What they need to do is what we call refinance. And you see people refinance for so many different reasons. I mentioned it to you for renovation. They might want to value add it, right? They might want to upgrade all the kitchens, or they might upgrade all the windows, right? So there's so many reasons for multifamily owners to refinance to get money out. Now, regardless what the interest rate would be, when they need money, they need money. They will refinance it out, take the money out, upgrade the apartment building, upgrade all the unit, and then what? They raise the rent. So when they raise the rent, it covers the interest, it covers all the expenses. So to them, it's still okay. It doesn't hurt, right? So that is a multifamily. And of course, when you purchase multifamily, that is not stabilized property. So for example, let's say you're buying a 12 units and there's only 6 units it's renting because the property is very rundown and it just cannot rent it out. It's okay. We can still give you bridge loan for it. Now, so many people are buying property using bridge loan. Why? It's just because in commercial lending, when we lend to you, it's based on the property. Now, if the property is not stabilized, meaning that it's not getting the market rent, if the property is not renting out, at the market value, no lender is going to give you a 5-year term or a 7-year term. Most of the lenders are going to give you a bridge loan. And when they give you a bridge loan, the purpose for the bridge loan is what? Is for you to get the property, move in, or settle down, and you have the time to renovate the property, stabilize the property, rent it out. And once you stabilize the property, now you can refinance it to a long-term low interest rate. So a lot of these bridge loans are what? Are high interest rates. Now, today, if you're buying a multifamily using a bridge loan, what is your interest rate looks like? Between 8% to 10%. 6 months ago, what is the interest rate looks like? Between 8% to 10%. Any change on bridge loan? Nothing. Not much. I mean, yeah, some lender might be a little, but honestly, it's not much of a difference. So to a lot of people, when they need to buy a multifamily, it's the rate is the same. It's not going to hurt me anything. So multifamily is still one of the biggest, hottest asset out there. And now today, what we're seeing is that a lot of people are buying what? Buying motels, and they convert motel into multifamilies. They convert motel into senior livings. They convert motel into assisted livings. So those are very, very good projects for us to look into. So does it have anything to do with the interest rate going up? Probably not. Okay, so that is multi-families. Now, let's move on to the next one. I did mention something about bridge loan, right? So what does bridge loan means? Bridge loan means it's a short-term loan. Normally, a bridge loan is between 12 months to 24 months. Very rare I see a bridge loan of 36 months. So it's between 12 months to 24 months. And I already said it. What is the purpose of bridge loan? is to utilize this type of loan is to acquire the property, stabilize it, because that property is not at par. Okay. So, however, this type of bridge loan, it's every single year, there will be bridge loan that it's up, the term is up. So whether you are purchasing a warehouse, you're buying an office building, you're buying retails, I don't care what you purchase. A lot of these are commercial properties, okay? So let's say you buy a warehouse. Many, especially for the last year or so, I see a lot of people purchasing warehouse for what? For their own business. Because of COVID, a lot of people are doing e-commerce and they used to rent places, but their business was so good. Now they're out there buying warehouses. Now, when they purchase a warehouse, a lot of the time the warehouse is actually empty. Okay, empty. And their business just started it, which means that they cannot show income when they purchase the property. When they purchase the warehouse, they cannot show tax return, none of those things, which means that they cannot use SBA loan. So a lot of these buyers purchase warehouses using bridge loan. They move in, now they're operating their business for about a year or so. Now they can provide income, and guess what? Now it's time for them to refinance out to get into SBA loan or some longer term. So a lot of these bridge loans are up, regardless when regardless what happened. Every single year there will be bridge loan, it's up, and they have to refinance. Now, of course, they can work a deal with their lender, saying that, hey, extend my loan for 6 months, extend my loan for another 3 months. But most of these bridge loan lenders, they are not going to refinance or extend the loan for another year or 2 years or 3 years. No, they don't want to. They want to recoup the money and they want to do whatever they need to do. Because remember, when they funded that warehouse back then, it's one set of interest rate. And today, the time changed. They want to take their money back and to do something else. So again, there are so many reasons that the current lender would not extend the loan for that client. So again, that is our opportunity. We can refinance it again. And we see a lot of situations where they have a bridge loan and we have to refinance them into another bridge loan. Just for example, some of the clients that they purchased the property, they have not yet, their business has not yet shown enough income to cover the debt, or they want to expand the property. Again, there are so many reasons for that. We're talking about commercial. We talk also, there are constructions. Okay, construction loans, fix and flip. We see a lot of, for the last few years, there's so many construction happening. Now, when I say construction, I'm not just talking about single family home. I'm talking about apartment buildings, mixed use, things like this. Now, many of these construction loans are complete. When the construction is completed, what happened? Most likely that construction loan or fix and flip loan, it's also, the time is up. Okay, now they have to get out of that construction loan. So now, when you have a new building, okay, can you get a permanent loan? No, you cannot get a permanent loan. Why? Because the building has not yet been rented out. You perhaps still have not yet got a CO, certificate of occupancy, but the construction is completed. So we see a lot of those cases all over the country, in New York, in California, in Texas, all over the place, where the entire building is done. They are waiting for CO. After the CO, certificate of occupancy, what happened? Now they need to hire someone to help them to market the property and to rent out. So there will be a period of time before the entire building can be stabilized. But then what do they have to do? They have to refinance to another bridge loan. Now, you go from a construction loan to what we call a mini perm loan. A mini perm loan is somewhere between like a bridge loan and a construction loan. The rate and term might be a little bit better, right? So again, you see a lot of those things are happening. The bridge loan is up. Now you can be fix and flip. Absolutely. A lot of people, for example, myself, I just done a fix and flip loan. And if I want to keep that property, I have to refinance out their fix and flip loan. But since I decided to sell it, that's another story. But what I want to share with you is that there are so many bridge loans out there in the market. A lot of people, I would say 95% of the people or business owner, when they purchase their property, commercial property, they used some type of bridge loan. And many of them will just continue to use bridge loan because it's not that easy to get a long-term 30-year note. So they will just going from a bridge loan to a bridge loan to a bridge loan to a bridge loan. So regardless what the interest rate is, regardless what the economy is, regardless what happened out there, when the bridge loan is up, you have to refinance. So that is a huge difference between commercial lending and residential lending. Residential lending, people do not refinance once the market is bad. But in commercial lending, we will keep refinance. Does it make sense? So I don't know. I think 2023 is a good year for us because, regardless what happened out there, it's just because for the last few years, the economy was good. A lot of business owners purchased their properties, and now the note is up. Somehow, somewhat, they have to refinance. And the good thing is that a lot of the people back then, when they purchased this loan and after these years, their business now is stabilized. One thing that I see in 2023 is that we might be doing a lot more SBA loan than before. Just because a lot of these loans are stabilized. A lot of this business are stabilized. Now we can use SBA loan to refinance them out to a much longer term. Okay. So that is just my 2 cents on bridge loans. Now, also, you see a lot of owner-occupied commercials. What does it mean, owner-occupied commercial? I mentioned many restaurants, e-commerce, office, businesses. They used to rent, but because of COVID, do you know that a lot of this commercial property was actually on sale? Retail. A lot of the retail space are empty. So to a lot of people, hey, it could be a good opportunity for them to purchase the space instead of continue renting. So yes, there's a lot of people buying, and I can see continually into 2023, I would see a lot more business owner will continue to purchase their commercial building. It's just because, again, the market is, when the market going down, when the price of single family going down, I bet a lot of these commercial units are also going down in price. And many business owners will take advantage, especially, for example, let's say in California right now, in the Bay Area. A lot of the office buildings are empty in Bay Area. If you don't believe me, go out there, you will see it. There's so many empty office space. And guess what? Actually, a lot of people are purchasing this type of building. And another type is gas station. Many business owners are purchasing gas stations, or investors are purchasing gas stations. Now, they buy gas station, might not purchase gas station to run the business. They can rent it to someone else to run the gas station business, but they are purchasing gas stations for investment. Now, do you know why? A lot of people know that green energy, right? So in California, no, not in California. I think in the not just in California. I think as a country itself, by the year 2025, which is not too far away from us, many car maker already saying that they're not going to produce any more gas vehicles. They all slowly converted into electrical vehicles. Then what happened to all these gas stations? Think about this. A lot of people are buying gas stations. Now they want to convert them into EV charging stations. Okay. So again, there's so many things happening out there. I mean, that's why I love commercial lending, because every time, when we talk to business owner, we see what they're trying to do. We see what the lender's lending in. And now we see the economy, what the economy is going toward. But anyhow, for our line of business, I see people will still out there buying. Commercial business owner will still out there still purchasing this type of assets. So I hope you to pay attention to what's around you. Okay, many of us come into commercial lending still wearing the hat that residential, like the 1 to 4 unit, but get out of it. Once you get out of it, you will see a lot more opportunity out there. It's incredible opportunity out there. So owner-occupied commercials, they still purchase and they still refinance. And I mentioned it to you already, right? It's just a bridge loan. They purchased the property probably 2 or 3 years ago, and now it's stabilized. Now we can get them into SBA loan. So that is what we're going to focusing on next year. A lot more SBA. Next type, it's business loans. Okay, business loans. Now, business loan, this is the type of loans that you don't have any anything to do with real estate. But when you run a business, it's not a matter of you need money or not. It's a matter of when do you need money, and how much money do you need as a business owner, right? So working capital is still out there, regardless what the interest rate is. Now, working capital has not much to do with whatever the prime rate is. Working capital, sorry, I take it back. This is working capital. Yes, working capital has a lot to do with the prime rate. So normally it's the prime rate plus a margin, 2%, 3%, whatever that might be. Okay. So, however, when a business needs funding to purchase an inventory, they need money. When the business need money to pay for their payrolls, they need money. When a business need funding to expand, they need money, or whatever that might be, they need money. So working capital is always out there. Next type is what we call the equipment loans, right? Equipment loans, when business needs equipment, they need equipment. Now, a lot of people saying, well, why would I buy equipment? Well, again, sometimes your equipment will break down, right? So we just funded a restaurant not long ago, about $35,000. What happened? Their restaurant, the air conditioning unit just broke. If the air conditioning is broken and it's so hot inside of the restaurant, you cannot open that door. You have to fix that equipment as soon as possible, right? So it is out there. It's needed. And this type of loans, the good thing about it is it's so quick. It normally takes about 3 or 4 days or 5 days max to get funded. So equipment loan is still out there. Now, what is equipment? Equipment is that anything that's essential to generate income for the business. That is the equipment. You know, doctor's office, you need X-ray machine, a massage place, a spa, you need massage chairs, a pizza place, you need an oven, you need a refrigerator, things like this. It's happening all day long. Okay. Now, next one is last week we talked about AR funding. I hope that you came online to listen to what Vincent had to say. AR funding, account receivable funding. Again, this thing is happening every single day, regardless what the economy is. Account receivable funding means that somebody provided a service or provided a product, and they are just waiting to get paid. And they have the account receivable, but for whatever reason, for example, right now we're working on a deal. It's $1 million deal, a $1 million account receivable. This particular company is out in California. What they do is that they produce some sort of high-tech device for Apple. Okay. Now, Apple is the customer, so they have the credibility. So when you produce something for Apple, absolutely you will get paid. But when are you going to get paid? According to him, he's saying that Apple now try to squeeze all these little vendors out there, little companies out there. They have to wait 90 days to get paid. They finish the job, deliver the product, they send them the account receivable. They have to wait 90 days to get paid. Now, many of these small businesses cannot wait that long. They need the capital back to do another job. So AR funding is perfect for this kind of client, manufacturers, services, this type of clients is all over the place. all over the place, because this type of clients normally is a B2B business. They do not sell stuff to a consumer. They deliver service to another to another business. And another example, e-commerce. A lot of businesses purchasing product overseas, and now they turn around, they sell it to Target, they sell it to Walmart, right? They sell it to Home Depot. Okay, now those are all credible companies. They will get paid. But again, the minimum many of these companies going to wait for is 45 days, 45 days up to 180 days, right? So all these we can fund, we can just based on their account receivables, we can give them the money, and we can give them money very, very quick. So think about this, guys. For all those insurance agents, loan officers, real estate agent out there, they are so worried about what happened in 2023. All these people that got laid off during Christmas time, 2023 might not be a good year for a lot of them. But what about us? We are sitting in a perfect gold mine right here. It's all up to you. Do you want to start digging or not? Yes, you might dig rock. When you hit the chisel in there, you might dig out a lot of rock, but you will hit the gold. And I promise you that you will hit that goal, because again, we are sitting in an industry that there are not many brokers like us where we can provide so much products. Many lenders, many brokers out there will be just focusing on single family home investment. Some of them just focusing on construction. Some of them just focusing on AR funding. Some of them just focusing on business. Many of them are like this. But we are the Walmart of commercial lending. We have so many different products that you can choose from, that you can use to service your client. And a lot of them out there need your service, need your expertise, needs you to let them know that, hey, we have the money for you. Cash advance. This is like a credit card loan. Somebody that opened up the business for let's say somebody opened up business just for 3 months. They need funding. Yes, this type of funding for them. Now, personally, I don't like it, because this is what I call a credit card loan, meaning that the interest rate is very, very high. But again, if they can use the money properly, to use the money to make more money for themselves, now it makes sense for them. Okay, but the option is out there. There are a lot of people that need this kind of loan just for emergency use, whatever that might be. Yes, absolutely, we can do that for them. Also, acquisitions, meaning that purchasing business. Now, there are so many business out there, and I'm not doing well for the last whatever years during COVID. Now you have other company that purchasing this business. Now, I know a client up in New York. You know what they do? He is out there going all over the place to purchase all those carry-out restaurants. They're purchasing all those carry-out restaurants. Okay, I don't know how he does it, but again, what he does is that he purchasing all these restaurants with a low price, and now they rent it back to the existing business owner, because they cannot afford to, if they cannot afford the rent, whatever that might be, they are doing hardship. But what he goes in is that, hey, let me purchase it. I'm going to buy it from you. I'm going to help you, but I'm going to rent it back to you, and you still run the same business. Okay, but you share the profit with me. So it's a pretty interesting business model. So there's so many things happening out there in the market right now that commercial lending is not going to go anywhere. And I will see, especially in 2023, many other industries will run into hardships. That is the perfect time for us to get them onto our platform. Now, what is our platform? We do not need you to become an expert in this business. All you have to do is just to plug into this platform, identify who needs the money, send it to us. We reviewed it. We let you know how it works. We let you know what the rate and term is, and you go out there to share with your client. And most importantly, let other people know, let other agents know. And that's why we have this disruption tour starting tomorrow, going into next year. It's because, again, right now we have everything ready. We will go from city to city to city to city, and to let people know about us. And I think people should know about us. There's a lot of business people out there that they need the funding, but they have no idea where to get the funding. And we are sitting in a gold mine. We are facing what I call the perfect storm is hitting us right now. It will, definitely. The market is going to keep sliding. The economy is keep sliding. A lot of companies will keep laying off people. The storm is right in front of us. And that is the time that we can build up our business. That is the time. I guarantee you one thing. When you and I ride through this storm, you're not just one person anymore. You will have a commercial lending business under you. And that is what we want to achieve using all these different products. And I also guarantee you one thing, there's a lot of the lenders out there. They will also come up with so many different products to adjust with the market. And we are the upfronter that can capture all these clients, capture all these people that is need an alternative way to make money. And throughout the opportunities, throughout the journey, you will learn so many other opportunities that come along with what Sequoia can offer. So again, ladies and gentlemen, that is just my 2 cents on what 2023 personally I feel. I believe that 2023 will be more busier than 2022. We will be running from city to city. We need you to be with us. So again, tomorrow we'll be in New York. Next week, we will be in Atlanta, Georgia. Now, if you need us to be in your city to help you to build, we are all for it. Let us know. But we need you to put at least, 20, 30, 40, 50 people in front of us, and we will fly to your city, and we will help you to build a business. So thank you so much for tonight, and I'm going to open it up if you have any questions or whatsoever, and let's open up the mic.